All right, when you think about the defense industry, what comes to mind? Big stuff, right? Fighter jets, massive warships, tanks. But what about all the invisible tech that actually makes them work? Today, we're diving into a company that's kind of like the high-tech heart of modern defense. Let's get into it.
So let me ask you this. What gives a missile its eyes? I mean, how does it see and track a target with pinpoint accuracy, even when there's smoke and all sorts of electronic jamming going on?
Okay, next question. What about a modern warship? Where does it get all the juice it needs to power its crazy advanced radar, its computers, its weapon systems? We're talking a ton of power here.
And one more for you. How do we protect our soldiers? How are military vehicles and aircraft shielded from all the new and evolving threats out there on the battlefield?
Well, you might be surprised, but the answer to all of those questions, a lot of the time, it's technology from one company, Leonardo DRS. These guys are the specialists. They're not building the whole jet, they're building the critical systems inside it.
All right, let's talk about what Leonardo DRS actually is, the modern military's tech supplier. So what do they specialize in? It really breaks down into four main buckets. You've got advanced sensing. This is literally the eyes for military gear. Think infrared sensors. Then there's network computing. That's the brains of the operation, connecting everything together. After that, you've got force protection, basically the shields to protect against all sorts of modern threats. And finally, electric power and propulsion. This is the muscle, the raw power for all the next-gen stuff.
Okay, so how do they make money? It's all about contracts, not counter-sales. Let me explain.
Just look at this chart. Their primary customer is, the U.S. government, a whopping 78% of their business. So what does that tell you? Well, it means their fate is directly tied to U.S. defense spending. On one hand, that's incredibly stable, right? But on the other, it means they are super dependent on one single massive customer. Okay, I'm going to throw a term at you that's super important in this industry, the book-to-bill ratio. It sounds complicated, but trust me, it's not. Just picture a bathtub. The book part? That's the new water flowing in, all the new orders and contracts they're signing. The bill part? That's the water draining out, the work they've finished and gotten paid for. So if your book-to-bill is over 1, it means you're filling the tub faster than it's draining. Your pipeline of future work is actually growing. Simple, right?
So they've got a ton of work lined up. But what does that mean for the bottom line? Let's do a quick financial health check.
And here's what that positive book-to-bill leads to. Check this out. A record total backlog of $8.9 billion. Think about it this way. It's like a restaurant that has reservations booked solid for the next few years. It gives them amazing visibility into where their money's going to come from.
And that massive backlog, it's turning directly into revenue growth. You can see it right here. They're looking at revenue going from about $3.6 billion up to $4.2 billion. I mean, that's a serious jump. And that kind of growth, well, it definitely makes people sit up and take notice. But revenue is only one piece of the puzzle. What about profit? Well, that's growing too. This chart shows something called adjusted EBITDA. The easiest way to think about this is it's a proxy for the cash the business is actually generating from its day-to-day operations. It's the engine, right? And that engine is growing from $400 million to $453 million. So a healthy trend.
All right, but it's not always smooth sailing, right? Let's talk about the tailwinds and the headwinds. What's helping them and what's holding them back?
So on the plus side, the tailwinds, things are looking pretty good. Management is talking about a huge defense funding bill, that record-breaking backlog we just mentioned, and just plain strong demand for their tech. But there are always challenges, right? The headwinds. They're dealing with supply chain headaches for key materials like germanium. R&D costs are going up because innovation isn't cheap. And of course, there's always the risk of government budget drama and potential shutdowns.
And they weren't shy about that supply chain problem. I mean, listen to this direct quote from management on their earnings call. They called the germanium situation, which is a really key material for their sensors, a thorny issue. That's pretty blunt. They're working on it for sure, but they've said it probably won't be totally sorted out until 2026. Okay, so let's put it all together in the investor's dossier. What's the bull case and what's the bear case? So, the bull case. Why might someone be optimistic? Well, that huge backlog gives them incredible visibility into future sales. Their tech is perfectly aligned with what the DoD wants right now, and hey, they've proven they can grow both revenue and profits. But the bear case. What are the risks to keep in mind? That supply chain problem isn't going away tomorrow. Higher costs for materials and R&D could put pressure on their margins. And let's be honest, being so dependent on the government always has its own set of risks.
And really, it all boils down to this one big question. You've got this record order book on one side, which is fantastic, but on the other, you've got these rising costs and supply chain issues. So,
Can DRS innovate fast enough to stay ahead of the game? That's really the heart of it.
So there you have it, a quick look at Leonardo DRS. Hopefully this breakdown helped make sense of what they do. If you got some value out of this, do me a favor and hit that like button and subscribe to Stocks Simplified. We've got more of these visual breakdowns coming your way.
And just a quick but really important reminder, this is for educational purposes only. It is absolutely not financial advice. All the info we talked about today comes straight from the company's public filings. You should always do your own research before making any investment decisions. Thanks again for watching.